Abby Glennie and I'm the co-manager of the Aberdeen UK Smaller Companies Growth Trust. Smaller companies generally lag large cap when we have a more risk-averse market. And in particular in the UK, smaller companies are seen as more domestically focused. And that's a challenge when people are worried about the UK economy. But actually, we think a lot of the stats give a good opportunity for small caps to outperform large caps in the UK. And part of that is a large valuation discount. So FTSE 100 is at around 4% discount to its historic average, whereas small and mid cap in the UK are over 20% discount to their long run average. So they're really pricing in a lot of negativity. And I think that's important because when we're seeing, even for instance, in this recent market rally in April, we are seeing small caps outperform large cap in the UK, despite the tough headlines on UK consumer, inflation risks, challenges for the house builders, etc. So I believe that capital will find opportunities. And while there are areas of challenge UK domestically, the UK small cap market is really actually quite diverse. And you're getting a big sticker discount for that UK headline when actually there's a lot of diversity, a lot of international revenue, and particularly within the UK also lots of areas of strength. The trust has tilts to quality growth momentum, but valuation is a consideration always in every investment decision. We think over the long term that tilt to quality has been a positive, particularly through various economic cycles. And it does provide more resilience in terms of trying to provide a more stable earnings profile and returns profile for investors. The trust, however, does have gearing. So we have to remember that that is a challenge in falling market environments, although we have reduced that gearing in recent periods. I think that we've seen periods where that quality tilt has particularly been important, such as COVID. And when we have more areas of macro uncertainty, I believe that that will become more of a focus. Whereas quality has really been a negatively performing factor over the last year or so, particularly in the UK. One of the key areas of importance, we believe, is the valuation premium that you're paying for that quality growth momentum exposure relative to the benchmark, which at only 2 PE points is really at a very historic low. And that will be increasingly important at times where earnings become under pressure. In terms of the themes the portfolio is exposed to, I'll talk about UK and international. So within the UK, we believe we have a lot of resilience in earnings for the portfolio. And that comes from a big exposure to UK infrastructure stocks, which is around 10% of the portfolio. Those are names like Morgan Sindall, Balfour Beatty, Galliford Try, Renew. Also within the rest of the UK domestic exposures, we believe we have resilience through areas like food producers, XPS pensions, Telecom Plus, names where we believe that earnings are going to be resilient. Then when we look at some of the other exposures, one of the newer areas for the business, for the portfolio, will be hard assets related businesses. We've already had exposure to some of the oil and gas exposed names such as Hunting, Rotork, Ashtead Technology. But we've increasingly added an exposure in mining exposed businesses such as Pan African Resources, Atalaya Mining and Capital Limited, where we believe we've seen a big improvement in a lot of the characteristics of quality that these businesses deliver. We have good cash flow generation, the balance sheets are in better place, they're showing good capital discipline. Also, these businesses are growth businesses and we believe their outlook remains very strong. The portfolio has around 53% revenue generated within the UK and therefore 47% generated internationally. That's slightly higher tilt to the UK than the benchmark, which is around 50-50 at the moment. But within that UK area, I think it's important to look at the exposures we have, where we think that the exposure to UK infrastructure, as well as a lot of types of businesses with resilient earnings, provides a good exposure. We believe we're underweight in terms of our exposures to things like UK consumer, housing related stocks. When we look at those international exposures, I think we've got a really diverse mix. Now, importantly, every stock in the portfolio has to be there for its own merits. So we don't target a specific UK or overseas exposure. We have very effective risk tools which help us to understand those exposures that we have, not just in terms of countries or sectors, but also in terms of factors driving the portfolio. Typically, that UK versus overseas exposure is quite balanced versus the benchmark and will be maximum around 5% underweight or overweight at any time. We didn't participate in any of the 2025 IPOs, but we would absolutely consider new listings. But those have to deserve a place in the portfolio on their own. And that is relative to looking at the characteristics of those businesses, what price they're looking to list at, what valuation, and importantly, where are the earnings expectations set, and if we believe that those can be met and beaten. I think when we look at the market, we've been finding a lot of new ideas within companies that actually have been listed for a long time in markets and we've never held before. So I think that's really encouraging in terms of that positive competition for capital we have in the portfolio and where we're able to generate what we think are new quality growth momentum ideas at very attractive valuations. Applied Nutrition was a 2024 IPO which we took part in, which has been a really successful story so far. In terms of that stock, we think it's got real global presence when you look at its revenue exposures. It's got increasing breadth and depth of retailer and distribution relationships, and great NPD, new product development, which continues to make sure their products are relevant for the consumer. Thanks for listening to this video update. If you'd like any more information about the Aberdeen UK Smaller Companies Growth Trust, then please do look at our website where we hope that you'll find some interesting resources.